Boys and girls, thanks for joining us today. We're going to take a look at Fibonacci trading. Fibonacci, of course, one of my favorite tools together with moving averages and probably the AO, I guess, and edit wave and impulse corrections, chart patterns. Well, I guess I have a lot of favorites, but fibs and moving averages are certainly on the higher side of that list. And we're going to take a look at that in just a second. First of all, though, the disclaimer explaining that this material here is intended and made and developed for a global audience. Please take into account that it may not be suitable for everyone. To get the corresponding info on charting, conditions, and other details, take a look at Admiral Markets Global.com. Select your country of residence and contact an appropriate entity. Also, the risk involved in trading for exchange and global financial markets is considered high and is very high risk. Please be aware of that and speak to an independent financial advisor for more information on that. This webinar is for educational and informational purposes only, and by continuing watching this webinar, you agree with this disclaimer here and the content stated in this slide. All right, thank you so much for your attention. As always, we're having this this rough go-to trade plan / checklist prior to entry. Then, of course, we'll discuss what kind of trade management I will be using with regard to any of the trades that I might be taking. You'll be watching me potentially take trades, or at least discuss trade setups that I might find interesting or not interesting. I use this this step list here, this just checklist as a rough guideline here. I'm always looking for defining the trend. And that's always important, even if you're trading against the trend, or even if you're not trading a trend at all and you're trading a range. Still, you need to know what the trend looks like so that you know that there isn't a trend, right, logically. Or if there is a trend, whether it's moving counter trend or with the trend. And this helps, of course, avoid emotions, disbalances in emotions, because otherwise, if we just look at the pair and say, oh, the price is moving that way, I'll jump in along. Well, it might work, but usually speaking, we want to be a bit more cautious in picking our spots of entry. And also, we want to be very, very diligent in choosing our exit spots, obviously, as well. And that's the trade management part of it. So, follow Admiral Markets, I would say, in social media. It's always a very useful info that you can get through Twitter, Facebook, and Google Circles here, as you can see. First of all, though, before we look at the charts, as always, just a quick look, quick sneak peek preview and peek at what we can expect today. We got PPI on the Euro zone 2 hours from now. We got Swiss PPI in 26 minutes from now. German GDP up, pretty good, 2.5. That 0.8 quarter to quarter, that looks good to me. French, disappointing though, 0.0, break even basically. What else do we have? We got core CPI and the USD coming up. We got Portuguese GDP, Euro GDP, Greek GDP, all kind of Euro news as always. And a long list of US news events here too. Alrighty. So yesterday we were looking at a specific Camarilla moving average strategy. Just to recap quickly for those, I hope you don't mind, let me also open up the question box here. Good morning, Marcio and Kaylin. Good to see you here. So yesterday we were looking at a specific strategy, and unfortunately the Euro didn't take a full loss, but it did a relatively bigger loss than usual, I would say, about 0.8. Unfortunately, it didn't get any follow-through to the downside. We got taken in here and then saw a retracement, one more downside, but then another retracement. 2 retracements was a bit too much. We could trail stop the I trail stopped this high right in here, in fact. Let's see. 14, which saved me a few pips. That was a bit of a discretionary element for myself because I didn't think that, or didn't see the euro odd. It was taking too long for me. The pound odd broke nicely though, so it's a bit ironic that the euro pound was in a downtrend and therefore the euro odd looked better, but actually the pound odd was better. The news event, of course, spiraled this down. This was a good trade, and the exit would have been somewhere here. So sometimes what I do in these cases, in certain cases, I do take both of them if they look good, because you can have sometimes these setups that one is working and one doesn't work, which is a bit annoying sometimes. In other cases, they kind of like both tend to break at one point or another. One could be earlier than the other could be a bit later. Unfortunately, the euro didn't break at all, and it's been retracing ever since. Now it's moving down after a bigger retracement back up to the H4 of today's Camarilla level. The pound odd, though, I think you can see the value of the strategy by looking at the pound odd. The break nicely, move the trading stop loss. Unfortunately, the trading stop loss wasn't the best here. So if the pound odd, if I would have been in the pound odd and I would have been up about close to 90 pips, I would have used the parabolic, especially if you look at the risk that is around 30 pips. That's up 3 to 1. I wouldn't risk that much on that. I think the parabolic would make the best sense in that case, and would have exited about 61, close to a 2 to 1 in that case. Okay, so there are some discretionary things occasionally that are worth using to optimize the results. Alrighty, let's move over to fib trading. I don't want to bore others. It was just a quick recap of those two trades yesterday. I don't want to scare people away. Let's see, Kaylin is saying I took the positions just to... Yes, it's part of the game. Yeah, the euro unfortunately didn't continue. It didn't break. So one of those losses indeed. I managed to reduce that loss indeed by just a tad, but not too much. One of the things that I sometimes keep an eye on is also the weekly pivot point. But I didn't have time to calculate what that weekly pivot point was. I'm still struggling to catch up some things after my holiday last week, so I didn't really have time. But the weekly pivot point is also sometimes something you want to keep an eye on. I'm not sure if the weekly pivot point was in the way. No, I don't think so. Not on the euro odd, and neither was the monthly pivot point. So no, I don't know why. One of those things, I guess, looked good. Maybe just a bit too much downside already. It had moved it down a lot already, of course. You can see here we already had a lot of trades moving to the downside here, so that could be a reason. Let me use a different template. Let me use the cleaner template so we can put fibs on, and the fibs are more visible. Let me see. Yeah, I'll show you in a second, Kaylin. 1 second. This one seems to be pretty clean. Yes, good. Okay, we can use this one for putting fibs on the charts. You're at 15. Yeah, I used basically this level here. I don't have my drawing to open yet, so let me do that right now. There's a small level right in here. It just didn't qualify as a fractal. Right here. This is actually not an official fractal, so that you didn't use it makes sense because it's not official fractal. But to me, the difference was so small, and I didn't like this motion here. To me, this hook back was okay. This hook back here, That's fine. I mean, that can happen sometimes. But then I want a continuation. From experience speaking, I tend to notice that, then you want to follow through. Otherwise, you're going to get, involved in a bigger correction potentially like this. So I managed to shave off a few pips, but it was really very little. It's maybe only a 0.2%, 0.2 of a risk, so it's really not that much. Euro-AUD is continuing though to the downside after the bigger retracement. It made kind of like an hourly retracement within this downtrend, and we can start putting fibs on this this move down. Now, if you look at the daily fib, we hit the 38.2 fib. We broke this bottom, so we got plenty of space down to the minus 272 target. Now, for those that have visited a fib webinar for myself earlier, know that there are different ways of fibbing. You can fib the swing high, swing low, the natural swing high, swing low, and you can judge whether it's a natural swing high, swing low by using the AO. So let's put that on. Indicators, Bill Williams, awesome oscillator. And you can see that this is also in the oscillator. This is from top to bottom here, back to the zero line. That's one swing high, swing low. Also, this from here to here is one fluid move on the oscillator. That's one swing high, swing low. So we can put those fibs on those swing high, swing lows. The other method, I'm not sure if everyone was here with the last fib webinar we had, but the other method was to fib from target to minus 618. Sorry, from retracement to minus 618 target. Only when we hit the minus 618 target. So that could take a bit longer before we can place the next fib. Now, in this daily chart, that would take forever before we hit the minus 618 target. But so in this case, I think it makes sense to put fibs on these two downsides for downside targets. Why we're looking for downside? Because we are in a downtrend. However you look at the Euro-AUD, I would say, if you have a channel like this, you can see that downside trend. If we put moving averages on our chart, like this, and like, let's see, this, you can see that price is below both of them, both moving averages. Now, why is that important? Because you might be wondering, hey, we're looking at a fib webinar. Why would I need to have channels on my chart and moving averages and an oscillator? The whole goal of that, despite the fact that this is a fib webinar, fibs are most useful in trending modes. Fibs are primarily tools that should be used when a currency is trending or strongly reversing. Like this Euro-AUD, in a way, can be considered a strong reversal, or in the meantime, it's a downtrend. If it's ranging, right, or just going sideways, we don't want to use fibs because the fibs have no value, because price is not going to respect those, because price is going to move through those levels and is going to go to the next support or resistance, horizontal levels, chart patterns. That's what it's respecting. So even if you use fibs, I personally would recommend to use these tools to identify if there's a trend going on. If there is, then the fibs have the most value. All right? So, with that said, that's the explanation of why we have those fibs on, the other tools on the chart. And that's why we need to know what the trend is. If you really strictly use that fib strategy I talked about last time, then you actually maybe don't even know it that much. The only thing you need to do is really put fibs on all time frames. We use multiple time frames. But personally, that's too intensive for me to use that strategy. I'd rather filter out by using a trend definition personally. So in this case, we got plenty of space down to the minus 272 and the minus 618 target, about 144.50, 144. That's the space we have on the daily charts on the Euro-AUD. So let's move to the 4-hour chart here. Let me make the 144 EMA a bit different color. Alrighty. So the 4-hour chart, you can see we had a plummet here, a slow upside correction up to the 38.2 fib, a double top, and then we've been moving down ever since. Let's take a look at that move down ever since. And we can put fibs on that downside here. Now the 34 EMA is, for me, very important because I use that as a primary tool for support and resistance and trend definition. It's probably the number one moving average I use. So here we had the first pullback, deep pullback, and we hit the target right there, which means we can start fibbing the next move down. It's a bit, seems not so logical to put a fib on this move. Price didn't really respect that fib either. So we can take that one off. Let's see the next one. Here, minus 618 target hit. So let's move from retracement to target, like this. Now you can see minus 272 target get hit, minus 618 target get hit. So this is a classical example, by the way. The reason I'm doing this is just to see what is the valid fib at the moment. As I take 2 sips of coffee, and you can see how nicely the currency works. 50 fib, down to the minus 72 target, hooks back to resistance, down to the minus 618, makes a consolidation, and down to the minus 1272, makes a consolidation, down to the minus 618. Really beautiful sometimes how the harmony of these fibs work. Let's try the next one then. This is just a very shallow fib. So we're starting to, it's really not so relevant anymore, that one. You can use the natural swing high, swing low. It's a 23.6 fib. 61.8 down to the minus 116.18 target. So you see from this fib analysis point of view, we see why it struggled yesterday with downside because it hit minus 618 target. And if we put a fib on this hourly again, because if you're in a very strong trend, you can see all of these retracements and all of these breaks are doing nicely. So the euro odd is again showing the same picture. We hit the 38.2 fib and moving down. So this is looking like a good shorting area to me. Let me add a fractal quickly. But personally, I wouldn't short it here. Any retracement, if we zoom into the 50-minute chart, any retracement of this swing high, swing low, up to the 61.8 fib, 78.6, the 50 fib, basically looks good to me. We had a move down. We struggled back up to resistance to the 38.2 fib, and we've broken out of this trend line. If you had a trend line like that, that was a perfect break. Very good trade if you took that one. Nice job on this break. This is how you can consistently and continuously take pullbacks and breaks as this currency starts to trend and fall. Very nicely, in fact. And we had the break already. This was a trade, of course, earlier. Personally, I wouldn't trade it right in here because my risk is somewhere in here, and some level of support is pretty close by. But that balance alters if, of course, we get a hook back to the 50 to the 61.8 fib, and we see resistance here. That would be an interesting shorting area. The stop loss above here for more downside. What would be the target? The entry could be here, 50, about 146.30-ish. The target would then be different, though. Target could be various levels. It could be basically the 1-hour fib that we have here at 145.26, or even the minus 618 at 144.66. The target, I would say, shouldn't be lower than 144. obviously, because that's a daily fib. But that's very far away from there. I wouldn't target that deep with this hourly 15-minute pullback, obviously. Any of the, I would say this minus 618 is probably the sweetest for about 170 pips. That looks pretty good to me. So this is something that I'll be keeping an eye on throughout the day. And if you look at the potential price action here, very bearish, all these hourly candles. These hourly candles have not been retraced yet. So that's why I would expect to retrace at this blue line, 146.20, maybe even at max up to 146.40. All this level here has not been retraced. Both of these levels have not been retraced as yet. And as we know, the Forex market tends to retrace almost everything. Not always, though. This candle has not been retraced either. The 4-hour world, we can see that candle has not been retraced that much. This candle neither. Not even this candle that much. Not all of them do, but most candles do get retraced. So that looks pretty interesting on the Euro-Odd. If we look at the fibs and trends, is a trade setup that we can keep an eye on throughout the day. Euro-Dollar is a bit of a mixture. We already have divergence between these bottoms. We talked about that on Tuesday, that a break of this bottom is very, very likely because of the fact that we don't have divergence, and this was a very strong AO reading to the downside. We got a very shallow retracement. What kind of retracement? Well, let's put a fib on. And you see it's only a 23.6 fib, or if you were to indeed use the entire swing high, swing low, it doesn't even retrace back to a fib. And we were very close, or actually just barely missed the minus 618. Price is respecting that minus 618 target and now making some consolidation. Yesterday was a very boring day. Just went sideways a couple of pips. No action at all. That's always a bit difficult with trading short time frames, and you get stuck in these kind of choppiness. At this moment, though, Eurodollar definitely falling a lot. And the only thing I dislike about the current Eurodollar, and sorry for all these lines. These are old lines. I haven't used this template for a while, for about 2 weeks maybe or so. So that's why. One of the things I don't like about the Eurodollar specifically is, although it can fall, one of the things I don't like is I don't see much space to the downside. Like the Euro-Odd, I see plenty of space to the next daily support levels. On this Euro-Dollar, I don't see it because of the support levels that we have here and here. So that's why I'm not that interested. I like the Euro-Odd more. Pound dollar is moving down too. Pretty fast fall, in fact. Down 250 pips already. And this is breaking through that horizontal support that we had here. So the GU looking maybe a bit more bearish than the Euro at the moment. However, there's the same story about having a bit of divergence between these bottoms, but that sometimes doesn't stop a pair from making a lot of falls before it makes a bigger correction. The GU hookbacks, every hookback has been seen within every rally has encountered resistance and seen further falls. So it's looking pretty bearish. At the moment, though, price has actually just broken a bottom, and difficult to say. Let me take a look at the daily chart. We had a very bearish day yesterday. I would still be more inclined to say that we would still see some retracement of that bearish day. And somewhere about here, for instance, or here, a retracement of that daily candle basically seems a bit more interesting to me than currently. But you never know. Momentums like this can really continue further than sometimes we imagine. So it'd be difficult to say. Maybe the Camarilla could help us with that to show where the breakout level could be. If I look at the hourly, the breakout level from a trendline perspective was earlier, was here. So this one is gone. Pretty shallow fib too. 23.6. I would say a bit unexpected break. I would have expected a bit more retracement first, but happening pretty early in the day as well. Yeah, I would be cautious. I don't know. It is looking bearish, but I would rather still wait on the sidelines and see how today rolls out for the moment. I don't have any preferred plan. It has dropped a lot. It's certainly moving down a lot. It probably broke some daily support in the meantime even. Although actually, maybe not. Look at that. Let's not get maybe too carried away. Prices maybe still heading towards, it did break some horizontal levels here, but it's actually still pretty close to the bottom of this, or within this bottom of this channel, in fact. So yeah, I would be still cautious about that. It has a lot of momentum, but it can encounter support and make it turn around again. So let's see. Let's see if there's anything else that's interesting. Oh, where do I think the GU will stop? 1 second. Good question. We can use the fibs for a better understanding of that. If we put a fib from swing high, swing low on the 4-hour chart, we see a 38.2 fib bounce here. The target could be this minus 618 at 167.28. Yeah, with a shallow fib like the 23.6, there's a minus 272 at 167.20. 167.20 and a minus 618 at 167.28. So yeah, around 2030 might be a balancing spot. It's not something that I would actively be looking for to trade, but maybe if I see some price action signals, if I see price lingering here, making a bounce up and a hook back, for instance, it could be worth it. Let's see, Macho, the fibs can be placed in both ways, in fact. You can place it from left to right or from right to left. I place it from left to right, like Nana does as well, not from right to left, because the difference is that if you place it from right to left, let's see, then yeah, to us it seems like, yeah, this would be a 16-18 bounce somehow. I don't know. It seems somehow the other way seems more logical to me, more natural to me. So I've always done it that way, but it will depend from trader to trader who you ask. None that I prefer this style though. Kaylin is saying it's reaching the end of the channel on L3 level. Yeah, I don't have the Camarilla here on the chart on this template. But that could be an interesting bounce as well, indeed. That could be an extra confluence together with these fibs that we have on this chart. Good stuff. So and Bob is saying odd USD and odd yen look close to being in the trigger. So let's take a look at those. Odd USD made a bigger retracement than I was hoping for, took me out on the upside. Maybe, from a discretionary point of view, the stop loss was moved a bit too early because this is a breakout of this trend line, and we know that those tend to hook back to a 61.8 fib, for instance. From a discretionary point of view, that could have been better to wait for a bounce like this before moving the stop loss. I just stuck to the rules very precisely, but we are getting some bounce here. Now, how far can this odd USD go? Because we're certainly in an uptrend. The support line, for instance, even this channel here, various stuff that show of an uptrend. The blue now, the orange line, the support orange line. Let me make that green. So yes, but the question is how far indeed. And is this the best time to enter? If we take a look at the 4-hour chart, we see bullish candles here, another bullish candle potentially right now. Daily chart. Let's see, daily chart didn't have much of a close, in fact. Close was about halfway that candle. There was not really a strong bullish sign. There's a bit of a wick here. That follow through was not as significant as I would have liked to see it with this upside like that. Although the euro odd looks very bearish to me, the odd USD doesn't look that fantastic indeed. And I think Bob was saying that it looks overbought to him. Let's put on a oscillator. There's certainly some divergence between these two tops, right about here. So from that perspective, it is looking a bit like a rising wedge as well. And that is a bit of a warning sign to us that the longs might be struggling here. All in all, price is also not moving that fast. I mean, it had its speed here, but it's kind of slowing down now. And it's different angle than price was when it was here. So the 61.8 fib here was okay because it's still a bouncing spot. But now I would be cautious. If you're in that trade, fine. But if not, then maybe I'll hook back to the 78.6 fib at 93.50. Okay, then let's say 93.55, for instance. But that would be already breaking this potential support line, which, in my opinion, makes it also less desirable. The fib is there, but it doesn't have that extra confluence of this support, in fact. So, all in all, that would make it not so desirable, in my opinion, that particular fib. And in fact, maybe we're retracing this entire fib, for instance. So, I would be more inclined to maybe fib this entire upside. That's about it, I guess. Let's see if there's something else. Kiwi. The Kiwi is looking a bit more interesting, I would say. Kane is saying he thinks that this will be a potential long. Well, if you look at price action, it is looking, the last few hours is looking bullish. So I agree with you on that one. That's true. This could be a hook back for more upside. From a fib perspective, we had the 618 bounce already. So what one could do is indeed put a fib on the breakout here, because we did have a breakout like this. Could be a hook back at this 93.73 with a tight stop loss at 57. Price is moving pretty fast. It looks pretty impulsive to the downside. I would probably wait for a bit more confirmation on the 15, some bounce there. All in all, I'm not a very big fan of it, though, due to the rising wedge more than anything at the moment. But we did, yeah, it's a mixture of a picture actually. This has gone to the zero line, which means that this has, at least some decent retracement going on. Let's see if there's something else. Maybe we can bump into something besides the Aussie. Definitely the Aussie looks more interesting to me than the euro or pound, though. The Kiwi could be that one, maybe. Let's take a look. We had a resistance level that was broken yesterday, or today actually. I had an entry order at 86.52. Placed yesterday afternoon in the New York session, and it got missed by about the skin of my tooth, or very little, 0.02 tip. Yeah, let's see, 0.02 pips indeed. So that was very little, or 0.5 a pip or something like that. Price is continuing further and further. Looks like some bullish price action signals. We get bullish candles, for instance, here. Fibs, if we look at the fibs, we can put fibs on his upside and see where the targets are, for instance, like this, and move the fib from retracement to target. You can see we got a target around 87.05 at the moment. So the last swing high, swing low has been from here to here on the 50-minute chart. So there's a potential for retracement to any of these levels, about 86.60, 86.65. Maybe not even that deep, though. And we could see this follow through to the upside. Yesterday's candle was bullish. That's nice confirmation. We broke yesterday's high already. And we have a strong 4-hour candle. So we could see maybe retracement of that 4-hour candle, but maybe not a break of that 4-hour low. So around 86.70 might be all the correction we will get from this New Zealand dollar before we follow through to the upside. That looks even more interesting, I would say, than the Aussie. Obviously, you always run the risk of finding a bigger retracement, but at the moment, we are making higher highs, higher lows, and we had at least this momentum up. That correction after that went to about 61.8 fib, as we can see, and we're getting a bounce off of the 61.8 fib. So we can build on the higher highs, higher lows. At the moment, the higher highs and higher lows are doing this. So this would be a potential higher low as well. That looks pretty interesting, just like the euro odd downside, of which indeed we're getting a retracement as we speak. We can move the fib now, of course, to the new bottom. So let's see how these two behave. Dollar Swissy is the same like the euro dollar. It's going close to resistance, so I'm not too interested in that. Dollar CAD did break to the downside here. That was an interesting triangle, and the break to the downside made sense, so maybe some of you took that trade. That trade is doing well. Break, pull back, and go. Classical break, pull back to the 50 fib, and continue down to the minus 272 target. So nice trading if you took that one. Oh, Machio, what currency? Ah, you're looking at the Kiwi. Yeah. Yeah, that's true. It is very potentially possible, actually, especially if you look at the weekly chart. That's always the disturbing part about trading, because depending on what time frame you look at, you see multiple things. This is certainly a very bearish candle, and I agree with you on that. And therefore, when we really get close to retracing that candle, we certainly have to be aware of that potential. 61.8, but especially the 78.6 are levels to definitely be aware of a potential stopping spot, and maybe even not only stopping, but potentially turning spot for more downside. So that's definitely true. For the moment, though, we have the potential to retrace this wick, let me say it this way, before making that downside. So we could take kind of like the upside trades up to the retracement level for down, and then maybe see the downside. So that's the idea. It's kind of like a bounce trade in a way. And you never know. Maybe we get up, price lingers here, and then continues. You never know. But for the moment, the more likely scenario does seem up, retrace of that big weekly candle and down, indeed. Already. Dollar CAD was an interesting trade. Let me know if you took that one. That is doing pretty well. Dollar yen. Dollar yen. We talked, or I showed yesterday my wave analysis, and the day before, and that was showing a potential. Oh, sorry about that. That was showing a potential pullback from our upside. That's looking like it's actually right spot on, because we had a fall and a rise ever since that analysis. So that looks pretty accurate, despite the massive correction that's going on this dollar yen, in fact. So it's difficult for wave analysis to be completed on a choppiness like this, because it makes so many ups and downs. It's more difficult. Despite that, that was still worked well. In general, though, I'm not a big fan of trading it. It's just a lot of yuckiness, in my opinion. And I don't see anything worthwhile to trade on the dollar yen, personally. If you see it differently, let me know. I would be interested in how you see it, but I don't see it. Pound yen. Broke through this trend line here. It's a smaller trend line. It's an inner trend line. We have a bigger trend line still connecting these bottoms, for instance, although maybe this one is better. There are various trend lines that are still intact and still indicating support, just like the pound dollar. The pound yen is the same in that regard. Obviously, we see a lot of struggle with these resistances, and the space is very tight, as I said yesterday, on the pound yen. We did have a good fall, stimulated, of course, by the pound dollar fall, but I don't see really anything that is much of interest to me. At the moment, we have a very big fall here, so we could maybe see a retracement of this big bearish candle. That once this is retraced, that could be maybe a resistance. So If price does get to 172, 172.10, that could be definitely a resistance level to be aware of. That is also a fib, obviously, an 886 fib, and the pound loves 886 fibs, or the 786 fib, pound dollar, and the pound in general, and euro dollar, they like these deep fibs. That could be interesting when price gets there. Not too interested in trading it up to those fibs, personally. Euro yen, hourly. Four-hour is getting some momentum to the downside here. And that is looking more like a break to the downside than the pound yen, in fact. A break of this triangle to the downside, subsequent hook back and continue. Let's put a fib on this downside, see where we are. Still haven't hit the minus 272 target, so that is a potential there. So if we zoom into the 50-minute world, because there's a pretty strong momentum here to the downside on the euro yen, I'm not a big fan of any yen pairs, but if there's any yen pair, maybe the euro yen downside does seem appealing. We could see maybe resistance here at 78.6 or 886 or 61.8 kick in. We already have seen price stop at the 50 fib, but if it does get a bit higher, it would be nice. Potential for a short with the stop loss above here. That would incline a potential trade down to minus 272 target of 139.20. This zone right in here. Or actually, the other way around. This is the profit potential. This is the risk right there. Oh, not a big fan of any yen pair, but this one to the downside could seem interesting as a follow through of this break, pull back, and continue. Kiwi yen didn't make it to the downside. It did break this trend line, but the Kiwi was one of the stronger pairs apparently. And although the yen pulled the New Zealand yen down, it isn't as bearish as the euro yen. And that has everything to do with the euro New Zealand moving down as well. We'll take a look at the euro New Zealand in a second, of course. Odd yen is following through to the upside as well. It's getting a bounce, a good bounce. If you took this hook back, for instance, was a lovely trade from you then in that case. Great job. At the moment, let's see, not looking as interesting as the euro odd or New Zealand dollar or euro yen, I would say, or dollar CAD. How the dollar CAD was, let me say it this way. Odd yen, let's see. There's this resistance here somehow. Price can definitely break through it, and it did make a decent retracement here. And in New Zealand yen, if we do some cross currency analysis, the New Zealand yen has moved up to the upside. So this trend line, this bearish trend line, doesn't seem to be in play. Actually, this bullish trend line seems to be in play, and this breakout is occurring. So that's good for the odd yen too, obviously. That was one of the reasons I didn't like the odd yen yesterday, because the New Zealand yen looked bearish. But that is not an effect anymore. Odd yen upside could be interesting, but I would be careful. I would be very careful. Maybe look for a relatively deeper pullback here, back for some kind of head and shoulders pattern. For instance, like this. Wait. Something like that maybe. That could maybe make sense. So, a deep fib maybe to, for instance, the 786 fib. That makes sense. Also regarding reward to risk potential, right? Because this could be the potential reward. This would be the potential risk. Well, a trade like that would only have to work out once and 4 times, and it would be already very profitable. Let's see, the pound odd. Same story probably as the euro odd in a way. Here too we can put a fib on this entire downside, and you will see that the price stopped at this time at 15 at the 38.2 fib. The pound odd retraced a bit deeper. We also see a trendline break and a follow through to the downside. Just like the euro odd, we see break after break after break, retracement after retracement after retracement. Most recently we had a retracement. Well, we have to see exactly, probably this swing high, swing low for the moment we'll use. You can see 38.2 bounce down to the minus 272. This could be the same as the euro odd, basically. Same potential here. If on the 50-minute world we make a hook back to test this top again, that could definitely be a potential resistance level. That's interesting to trade down to the minus 272 target here. Let's see, what else? Pound Swissy. Sylvia is asking about the pound Swissy. Let's take a look. Sorry, I'm just too curious about the euro New Zealand. 1 second. Why? Because this hook back here was a trade 38.2 or 50 fib. I had it somehow. Yeah, probably like this. Not sure why. It was a 50 fib bounce. And just curious how that's doing. It's doing pretty well. It's still continuing, and that's up about 130 pips, 140, 150 even. So that euro New Zealand short is doing very nicely. Anyhow, sorry, let me continue here with New Zealand Swissy was also a trade idea here of the broken support, break, pullback from upside, classical break, pullback to the broken level. That was also a very nice trade off of this 76.60. That's also up about 80. So those were nice trades this week. Let's see. Pound Swissy. Let me try to find it. Don't see it. 1 second. Pound Swissy. Bouncing off the 38.2 fib after it already bounced off to 23.6. So the 38.2 could have been indeed the bounce spot for this pound Swissy. It's definitely possible. Any of these fibs could be the turning spot from our upside indeed. 38.2 is relatively shallow, but could be the one indeed. We're having higher highs and higher lows on this daily chart on the pound Swissy. So any of these fibs could be the next higher low from upside until we bump into the bigger resistance, which at the moment is all the way here at the top. So yeah, it looks good. The only thing is that we already have the bounce. So one way of doing that is, let's see, let me take a look. Let me just quickly put moving averages on this chart. There are a couple of ways to do it. I would like to see price action above the 34 EMA band of the hourly though. If we break above it, we'll probably see a hook back to it and then another bounce most likely. There are a couple of ways of trading it. We could either trade the hook back here, so wait for a trace, wait for this to finish its up move, put a fib on it, wait for a retrace back to anywhere of these fibs, or maybe, for instance, here to the 78.6 at 149.22. Take it, put an entry order there, for instance, or 149.25 after it has moved up and broken through the moving averages, or wait for a confirmation of price action signals at that level, or wait for the break of the future top. So let it ride up, make a hook back, let it break this top, and that would be the entry there. Price has actually retraced, was above all the moving averages, has retraced back to the intermediate one, and has dragged the short term back to the intermediate, and is now trying to break above it again. So this is a breakout scenario. That's for sure. It definitely is. But the question is this indeed going to be a breakout, or is this still going to be some choppiness for a hook back down to the 50 fib before we move up? Excuse me. So that's why I'm a bit cautious still. I wouldn't jump in here because I think as soon as price breaks above the moving averages, it's going to slam in some resistance that sends this lower again. And then we'll have to see. Do we get the follow through, or do we get some choppiness and then one more downside before we bounce off the 50 fib? Oh, 1 second. Something like this. We can take a look at the 4-hour maybe to judge which one of the two scenarios could be more likely. If you look at this, I would say the continuation up seems more likely. I mean, the price has gone back to the 34 EMA on the 4-hour chart here. And what could happen is a break above it and a break hook back to it and then a bounce again. I would probably, looking at this, it seems more likely. Price has accelerated pretty decently here from the moving averages. Price has also torn away the moving averages from each other. There's space between all moving average sets, all sets of moving averages. More space than ever before between this. In such a scenario, a 38.2 bounce seems more likely, whereas in other scenarios, a deeper fib was more likely, like the 50 here, and here even potentially deeper, as we can see. This one, a shallow fib, does fit within the structure of the moving averages, and therefore a break, pull back, and go like this, I would say is a decent probability. Good point, Sylvia. It's good we looked at the pound Swissy. So let's see if that indeed plays out. Oh, I do have the pound Swissy. It's here. Okay, doesn't matter. So let's see if there's anything else what we can look at. Wow, pound cat indeed following its downside here. Very interesting. Let's see. Let me get my bearings here quickly. Well, yeah, I didn't look at the pound CAD too much this week, but it is moving nice. It's a pity. Oh well. Okay, dude. Never regret the past, but it's a very nice break, in fact, and it is moving down a lot. And it's funny though, because it was something that with the pound CAD and euro CAD that we did keep an eye on. Remember, we were talking about. I don't know if you were in that session when I was talking about it, but we were looking at how many weeks this top has not been broken, for instance, here, and that this hook back could be a reason for downside, for instance, on this pound CAD and the euro CAD too. Last week was a bearish candle, and we retraced that bearish candle, and that was a pretty interesting hook back for more downside, as we can see in retrospect. It's just a pity. I didn't trade it myself, but euro CAD had the same thing, in fact. And I'm sure some of you remember that I was looking for at least 6 weeks on the euro CAD. I said 6 weeks, very important. 1, 2, 3, 4, 5, 6 weeks. We don't break this bottom, we're going to retrace lower. And it's interesting how this time factor works, doesn't it? Because look at this. 1, 2, 3, 4, 5, right? So you got kind of like that downside momentum and a kind of like slowish upside correction. Do you see that? That's time factor working. Why? Because we got the impulse here and we got the bear flag correction like that. That's what time factor does. And what you have also on the daily chart is not the 6 weeks was crucial, and it had to spend 6 weeks here to create that. Not only that, but it had to create the effect of an impulse correction for more downside. It also, in that same time, made this head and shoulders pattern. So isn't that neat how time factor can help us with understanding when a retracement could take place? Because you know that I'm a big trend trader, and I'm always looking for trend trades. And this was a big trend on the euro CAD, but at one point or another, this, a trend like this is going to stop. And it's interesting that due to time factor, the call of ending of the uptrend here, or at least a decent retracement, let me say it this way. We're not sure if the whole uptrend is necessarily over, but certainly a big stalling point was accurately pinpointed by using time factor knowledge, right? So that's pretty cool. Right here, indeed, 1, 2, 3, 4, 5, 6th candle, not break of a top, and boom, downside, boom, downside. Very nice. And all of these days we've seen follow through here. The moment, though, I'm trying to see if there's anything to look at the moment. You see, at the moment it's difficult. You see, if you have that time factor knowledge on the weekly, then all of these breaks could be trades that you want to trade, potentially, depending on how you trade and what you trade. But if you have that knowledge, then you know that these breaks could lead to some downside. Well, this was a news event trade, a news event break, but you get my point. And here too. Well, anyhow, those are trades of the past, but it's interesting, though, how nice sometimes these trend lines can be. At the moment, though, we don't have anything like that. We broke through support, and we're moving and traveling as we speak. And let's see if there are any fib potentials that might make sense. If we put a fib on this, maybe, for instance, minus 272 target here. We could put a fib on the most recent swing high, swing low of the 15-minute chart. and another hook back to one of these fibs, we could still see some fall down to 148, like that. That could be interesting. Not sure how far how deep we can get. Maybe the 61.8 is all, 149. That could be interesting. Capitalizing on the euro weakness against the CAD. Just like the euro odd. In that regard, we can take a look at the odd CAD to see, what's going on with that one. And it's just choppy a bit. It's going sideways, so that doesn't hinder any of the potentials on the euro odd or euro CAD. On New Zealand, that's choppy too. It had it down, it had it up, it has it down again, it had it down up before it. Doesn't have much guidance here. What else? Does anyone have a preference, by the way? Maybe one currency pair that I haven't mentioned yet? All right, so let me know in the chat. I'll be back in 30 seconds. Already, let's see. GU, Viganta's asking about GU and CAD Yen, CAD Swiss. Certainly, we can take a look at that. Let's see. Yeah, GU is getting to an area that I would consider a bouncing spot, but there's a lot of bearish momentum, so I'm always a bit careful when there's so much momentum riding behind it because it could fall further. It could fall down to the minus 618 and minus 1,000, for instance, right? You never know. Instead of it just could pause here and then fall one more time. If that were to happen, then 16670 I would think is a decent bouncing spot potential because of the bigger daily trend line in general, the targets, of course, and the fact that it already had made a big downside and it's ready for some retracement before maybe more fall or more up, whatever. The question is, what's going to happen right here, though? I think we'll have to just play it by ear a bit, to be honest. We'll have to see how price responds to this level. It's still very early in the day. If it would be towards the end of the London session, close to the London end, and price is still hanging around here, then this could become a support area. Same like if London closes and price is here, then that could become, the time factor could become support in itself. But otherwise, it's still early in the day, and we could see just some small bear flag and then a break through it. I would want to keep an eye on probably how this bear flag breaks. If the bear flag breaks above the top trend line, that could be a breakout to the upside. If it breaks below it, it could be a break to the downside. Basically, I want to see some consolidation and see which side it breaks to have some more comprehension on which side it could continue. I don't want to trade it here because, yes, we have momentum to the downside, but we're reaching a level where it's unsure whether we continue or bounce. So in that regard, I'd rather wait for the next consolidation, or pullback, just like when we had a pullback here and we had a break, hook back and go, and we had a break of this trend line potentially, or this trend line, maybe even this morning. It's not something I traded, but if you were looking at the charts 5 hours ago or something like that, no, not even that, 3 hours, three and a half hours ago. I don't typically trade the GU that early though, but this was a break that did very well, in fact. So you can see sometimes that even breaks in the Asian session, even on the pound dollar, don't necessarily fail. They do sometimes continue. Anyhow, that's the past, but this is my main thinking now. Yes, a lot of momentum, but getting close to support. Question is, where exactly will it bounce? And it could be here, it could be here, it could be even lower, who knows? So for the moment, I want to wait for more information, basically. CAD yen, let's take a look. CAD yen and CAD Swiss. Oh, wow. Yeah, the dollar CAD did fall yesterday, and the dollar yen is moving up, so then the CAD yen is moving up more, of course. Well, let's see, daily chart. Let me put on my other template here. Seems a bit of a funny cocktail in a way of a lot of choppiness here, a lot of big volatility up and down. Obviously, this is a big fall, big volatility here, and now kind of slow volatility. In a way, we could put fibs, I would say, on both sides. This is a 61.8 fib bounce, but also here to downside, potentially. Are these fibs being respected? The price did stop at the 38.2. Kind of stopped. Didn't really stop that much at these fibs. Roughly speaking, it did. Next target could be the 78.6 at 94.30. There is some upswing at the moment here in this channel to the upside. And price seemingly breaking through some resistance here. So that's looking bullish to me. Maybe that's not so surprising to you, but I agree if you had that thought. Bullish price action. Overall, the bigger picture, it is quite choppy. But if we zoom in, we can see some potential maybe for an upside trade here to the 78.6 fib at 94.30, I would say. Now, we don't have much space left, do we? Up to that uptrend, to the top of that uptrend channel and to the fib. Considering the risk that we would have, it wouldn't match up that much. But if we get a hook back to retrace either this candle or this candle, and we can even put a fib obviously on this upside, somewhere to the 50 or the 61.8 fib, that definitely changes the balance here of the R2Rs for decent R2R there. So that could be interesting. Let's take a look at the daily candle. Daily candle we see engulfing twins. So one way of tackling it is just letting this daily engulfing twins post today, close today, wait for the end of the day, and put a pending order at the retracement of today's bullish engulfing twins about the 50 fib for a target of the minus 2.7 and 78.6 confluence with a stop loss below today's low. That could be a trade setup at the end of today. Something like that, indeed. I'm not sure if that's what you were thinking about. Let's see, Kaylin says I had an entry at 93.72. Okay. So some ups and downs there, I understand. Yeah, That's always indeed difficult. I can imagine, when you 93.72, I can understand that because, you take it here and you're scared for the retrace, which definitely could happen before continuing up. And we never know. This is, at the moment, it's an impulse, an ongoing impulse, but we don't know how far that can go before we get some retracement. That's always the question, how much you want to trade that indeed. There could still be some pips left. You never know. But I can see why you did that by moving to break even. At the moment, I wouldn't chase the trade if I were you. If you're already in the trade, I would skip it for the moment, and I would just let this ride out until you get the bigger correction, and then that could be a different trade setup. I tend to, almost in all cases, try to avoid trading a similar setup the second time. Not to revenge trade. I think at the moment we're still close to that resistance. There's probably a decent chance of making this retracement back up before we move up. I would say, why not wait for that? Would be my idea, at least for myself. CAD Swissy. Oh, wow. Big move up here. A lot of CAD strength, not only against the dollar. I didn't look at the CAD Swissy. That from this point of view. Looks a bit different now if we have the moving averages coming in like this, though. But wow, big move. Yeah, the funny thing is, maybe I now remember, one of the reasons I didn't like that CAD Swissy too much was this pattern here. It looked like a bit of a rising wedge, but we broke out of that rising wedge to the upside, indeed. Interesting. Well, you can see everything is aligned, long-term, intermediate, up, and you can see dip down, support, dip down, support, dip down, support. It did take a long, but eventually it did break to the upside. Funny. Nice. Well, let's take a look if there's any way of potentially entering here. The daily chart, you can see it's actually, interesting enough, the daily is in a downtrend, isn't it? The CAD Swissy got moving averages above it, and actually price went above the short term, hooked back to the short term, and now moving back up to the intermediate. Isn't that funny how that all pieces together? But now I'm talking about moving averages more than about fibs. Sorry for that. Yeah, so maybe I'll be cautious. From a price action point of view, if price were to hook back to support levels, obviously that could still be a bouncing spot. Adrian is saying it's euro weakness. Yeah, definitely can see that euro weakness set. And let's see how that New Zealand dollar and euro odd are doing. Euro odd is not making a big pullback. Didn't get to that level that I was looking for. I only went up to the 38.2 fib, which is was on the shallow side. Let's see Kiwi. Close to the 86.70 that I was talking about. Not there quite yet, though. Euro yen. Nope, euro yen is breaking and is not retracing back higher. Yeah, Aussie made a pretty strong fall too. I think we talked about this level here, 93.66. We talked about the potential head and shoulders like that, right? That could be a bouncing spot. This price really came very close, 93.67 or 93.68. That if someone took that bounce, it's doing pretty well. Got some bounce there, so that's good. It's a very small risk, isn't it? Relatively. Well, folks, this is all what I see at the moment. So let's see how it continues. An entry now? Yeah, good question. It could still make a hook back on the 5-minute chart. This is not going to disappear without making some hook back, usually speaking. So although it's getting some, sometimes it can happen that a bounce is just very strong and just keeps pushing it. It can happen, but I hook back on the 5-minute would make sense indeed. So we could put even a fib. I don't, we're getting into very details here, but could be a hook back down back to 70, in fact, before we get a bounce. Caden's saying 81 is resistance. So if that's so, we can see I don't have the Camarilla here. So if that's so, then we could see maybe something like that. Make sure if you're taking intraday trades to take a look at the pivot points in Camarilla, by the way. Because today's session was a fib webinar, I didn't really want to look at that, otherwise it would be confusing too many things. If you're trading hourly, you don't necessarily, hourly charts you wouldn't necessarily need it, but less than hourly, it's certainly worth it. So folks, that wraps it up for today. Let's keep an eye on these ideas. Some of these ideas are not valid anymore, I guess, but others might still be, could play out. So hopefully they do well, and you do well with your trading, and wish you all, in that regard, good trading. And we'll be back tonight with a webinar. I forgot, actually. Let me take a quick look. Methods for boosting profit. So looking forward to see you then. I hope that you can join at 6 p.m. Central European Time. Thanks again for joining, and see you soon. Cheers.